Hey, guess what happened in the markets today? So, it started off a bit rocky. Trump made a comment that basically confirmed no exceptions on tariffs, even on electronic goods. That freaked people out because markets were hoping for some wiggle room. It's like hoping your boss will let you off early, then hearing, nope, everyone stays late. But here's the catch. Even though that sounded bad, it didn't crash everything. It just delayed the rally. Think of it like traffic slowing down, not a full roadblock. Now, here's something interesting. When governments start to look messy or panic, people stop panicking. Weird, right? But it makes sense. When leaders start flipping decisions or changing presidential orders on the fly, it shows there's tension or disagreement at the top. And the markets hate confusion like that. One tweet from a president can wipe out trillions of dollars in market value. Wild. And guess what tends to benefit from all this chaos? Bitcoin. Yeah, every time people start losing trust in the system, whether it's government, money, or policy, Bitcoin starts shining. It's like the cool outsider who doesn't care what's happening in the drama. Even over the weekend, things got weird. Saturday looked chill, some green candles on crypto charts. Sunday, boom, price got squeezed hard. That's retail traders doing their thing, not big institutions. So weekend moves? Not always reliable, but still part of the bigger pattern. And the bigger pattern? The messier Trump's policies seem, the more Bitcoin becomes attractive. Why? Because in the end, Trump's game usually means printing more money, not less. More money in the system equals more liquidity equals good for Bitcoin. So yeah, chaos isn't so scary for crypto. Plus, there's this sneaky thing happening with the US dollar. They're kind of trying to weaken it on purpose to boost exports. The DXY, that's the dollar index, has been slipping. But here's the twist. Other currencies like the yen, dong, baht, they're doing even worse. At some point, their people might start asking, wait, why are we working so hard if our money's worth so little? And then there's this finance guy, Hartnett, saying, go long on 2-year treasuries and short the S&P 500. That's fancy talk, but what it really means is the US might need emergency money soon, but in the long run, the economy could still be okay. In the short term, though, liquidity dries up. People expect the Fed, Powell, to panic and inject cash. When that happens, inflation goes up. And again, what usually does well in inflation? You guessed it, Bitcoin. Now over in China, they're planning to cut the RRR, that's the amount of money banks must keep in the central bank, on May 15th. When they cut that, banks can lend more money enters the system. That also means inflation could go up there too. And what likes inflation and liquidity? Yep, Bitcoin again. So overall, it's not a bear market, because a bear market usually means less money circulating. But right now, with the US and China both leaning toward more liquidity, there's reason to be hopeful. No one can say the exact hour or day Bitcoin will jump, but with all this going on, the setup looks pretty bullish.